Today we are going to talk about the state of Chinese economy. Recently, a lot of people lost a lot of money on investing, I should say gambling on Chinese companies. The reason for that is that those people don't understand China, don't understand how things operate in China. They take all the information come out of China, all the data, statistics come out of China at its face value. They don't know that all those stuff are just propagandas. They need to look beyond those news stories and statistics to get into the truth of things happening in China. What is happening in the economy? What is happening with those companies? A disclaimer: the content of this video is the author's personal point of view and analysis, which does not constitute any investment advice. If you are interested in this content, please use this link to join my Telegram group, where you'll find more timely information and have the opportunity to participate in the discussion. Okay, what I'm going to talk about will start from this economic model. You have the central bank on the very top, and then you have commercial banks that below the central bank, and then you have the government sector and business sector, household sector, and then you have the import-export sector. This is a very classic framework to analyze an economy. Okay, let's talk about the government sector. The fact is, China has a very big government. The government needs to provide support for the party, for the government employees, for the army, for the all its propaganda sectors and education sectors. And then on top of that, the retirement fund and the medical insurance fund, government sponsored, has big problem. They are going to run into deficit very soon. The government just cannot bear such burden anymore. Soon you will find the effect of that. And then on the local government side, right now, the local government has very high debt burden. And because of the recent problem with the real estate market in China, previously the local government depends on the selling the land to fund their finances. But right now, that source of funding is dwindling. Soon you will find the local government will run into financial problem. We heard some news stories from some sources that there are some local governments already freezed hiring, and in some cases, the local government employees get their bonuses and even salaries get cut. So that's already happening. And then you have the third sector, that is the state-owned companies. That's a very big sector. The government owns a lot of companies, but those companies are not very profitable. A lot of them even depend on the government to subsidize their operations. So they provide a lot of employment opportunities, but they are not making a lot of profits. Even there are some monopolized sector, the profit level isn't very good. So if those sectors are running by private companies, the companies will make tons of money, but the state-owned companies are prevalently has a very low efficiency, so they're not making a lot of money. So the government cannot depend on those state-owned companies to provide any financial support for the operations of the government. And let's look at the business sector. Currently, a lot of companies in China are loaded with very high level of debt. And the companies are not good at managing their finances. It's very, I would say, very unprofessional in managing the financial risks. So you heard a lot of stories of companies running into liquidity problems. For example, the Evergrande, you heard recently, they have been defaulting on their debts. So when the economy was good, you don't see anything. But when the economy runs into problems, those companies will very easily get into trouble. So their ability to dealing with risks isn't very good. Talk about the real estate sector. The entire sector is facing the running into a very big trouble. It's already happening. So this will impact the developers, the real estate companies, and also impact the banks, the government. They cannot collect the taxes anymore. They cannot sell the land to fund their operations. And then you have the design companies. You have the the builders, you have the building equipment manufacturers, you have the building materials, the company that makes the appliances. All of those companies are heavily impacted by this real estate crisis in China. Then you have the pandemic that basically devastated the restaurant business, the retail business, the entertainment and travel business. Then the Chinese government did a lot of things, intentionally or unintentionally, incurred huge blow to a lot of businesses. For example, they fined heavily on the internet companies. They basically eliminated the education business. They created very strict restrictions on the gaming business, and they ordered the software that a company relies on to operate their business. I'm talking about the company DIDI. It's the equivalent of Uber in China. They ordered their software to be stopped being downloaded in the App Store. So basically, that essentially shut down that business. And then later on, I think they relaxed a little bit. But that's a huge blow to the company. It's all because of the government is not happy with the company being listed in the U.S. Without the approval of the Chinese government. And then you have the internet stores selling products to their audiences. A lot of them gets fined recently. In one instance, one person gets fined like 1.4 billion Chinese yuan. It's the equivalent of more than 200 million US dollars. So just one person, very huge amount of fines. So all of this partially because of the government is running into financial problems. So they're trying to squeeze money out of a lot of businesses, private businesses. And then you have the government-sponsored boycott of the foreign companies. Because of that, a lot of South Korean companies and Japanese companies are accelerating their pace to move out of China. And then Amazon recently started cracking down on the Chinese sellers for their questionable business operations. For example, some internet sellers from China are creating a lot of false reviews on their products. So that gets cracked down. A lot of business being shut down by Amazon. And then you have the relationship with the United States. Because of that, the U.S. government put a very strict restrictions on technology transfer to Chinese companies, especially related to the chip making industry. So because of that, the Chinese chip makers is enduring a huge problem, and the entire chip supply in China may get devastated because of that. And then you have the power shortage and the shipping rates. Sometimes the shipping rates increased by 10 times. So all of these is huge blow to the manufacturer business. Those companies, if they export their products to the United States and other parts of the world, if the shipping rates increase by 10 times, that's a huge blow. And then you have the relationship with Australia. That created a huge problem with coal supply in China. And then you have the flooding this last summer in China. That hugely impacted the green production. So the food problem, food shortage. Recently, there are news that China imported a lot of greens and soybeans. In some instances, 10 times or 16 times more than the previous imports. Okay. If you look at all the sectors, the import, export, the mining, agriculture, transportation, machinery, the things related to people's daily livelihood. I'm talking about the food, the clothes, the housing, the transportation, all of the stuffs, and the retailing, the restaurant, traveling, internet, education, consulting, real estate, the security trading, the banks. If you look at all of those sectors right now, only import, export is a bright spot. All the other sectors are all very depressing. All of these have a huge negative impact on people's income and people's employment. Every year, there are about 10 million university graduates, and on top of that, you have the high school graduates coming out of school each year. So that's a huge problem with the employment situation in China. Let's talk about the households. I'm going to look at the household balance sheet to analyze the problem in the Chinese economy, how they are going to impact, or how they already impacted the individuals or households' financial situation. The first item is cash or cash equivalent. The inflation making the cash deposits in the bank lose its purchasing power, and then you have the personal investment products, they defaulted. A lot of people lost a lot of money on those products. And then you have what is happening in the Evergrande. A lot of people invested in their financial products. Those products is now defaulting, and then a lot of people lost money on the Bitcoin, on the investment in the oil. You remember last year, the oil went down into negative price. That's all because of a lot of investors in China bought the oil and oil futures, I believe. And when the expiration dates approaching on the last day, no people is buying those future contracts. So that made the oil price went down to negative. A lot of people lost a lot of money on those. And then the Chinese stock market is not very good. Unlike the U.S. stock market is running very good, but the Chinese stock market is very depressing. And then the real estate in China is basically crashing. And then a lot of people borrowed a lot on their mortgages, on their borrowings, on the buying their cars, and then the credit card debt, and then they have a lot of personal debt. So if you look at all of those, on the asset side, the cash is losing its value because of inflation, and the deposits, the investments gets defaulted, and the stock market is depressing, and the housing value, the house is losing their value. So all on the asset side is a huge. They're losing their value. So on the liability side, people are building up their debts. So not very good picture. And on the equity side, a major source of equity building is their employment income. But on that side, the unemployment situation is getting worse every day in China, and income increase gets very slow. So that doesn't help their building their balance sheet. So let's talk about the sector of imports, exports, and the banks. Imports, exports is the only bright spot under the pandemic in China. because a lot of manufacturing in other places in the world being shut down by the pandemic. But right now, the world is opening up, so we can expect this import-export boom, the export boom in China will get impacted. So when this gets the situation, the export from China, when this is pressured by the opening up in the other parts of the world, we can expect the foreign exchange reserves and the exchange rate of Chinese currency will get some negative impact. And then on the commercial bank side, right now, all of those commercial banks in China has a huge bad debt on their books. Sometimes you won't see those bad debts from their balance sheet because a lot of banks simply just when a debt gets past due, they simply extend the expiration date of those debt, the due date of those debt, to make those debt looks like they're still current, but in fact, those debts already past due. But on books, they look good. So you won't see this bad debt problem from books of the banks. And then the central bank will be forced to provide more liquidity to save the economy. So that will have a huge impact on the future, negative impact on the future of the Chinese economy, and it will also push down the exchange rate of the Chinese currency. Okay, this is the end of this presentation. In the final word, a lot of the news stories, the statistics come out of China are being used by the government to manage your expectation. So those news stories and statistics are not necessarily reflecting the true picture of the Chinese economy. So when those are being used to manage your expectations, you should be very careful. Don't be fooled by those news stories and the statistics. Otherwise, you lose a lot of money when you invest, or more precisely, gamble on the stocks of Chinese companies. Okay, as always, there's a jump, and that represents the jump in the stock market. So if you are investing in a value stock, you always see a jump. Okay, thanks for watching. As always, if you are interested in the content of this presentation, please subscribe to my channel and click on that reminder bell so that next time when I upload a new video, a new presentation, you will be reminded. Thank you very much.